thought I'd make one more video today really quick to share some analysis that Obi-Wan Kenobi was sharing with me in the Discord, well, our mod team. And so I thought it'd be really cool to share really quickly here. It's called a inverted gap to H, and that's because it's the inversion of a bullish pattern, and here it's bearish because the gap forms on a downtrend. So you can see that I have it labeled here in this blue, and the top and the bottom of the pattern marked. So this high was at 411.74, the bottom was at 370.59, and I went ahead and calculated the price targets. If there is a bearish breakout here, I think 350 is perfect. That's the perfect target I've been looking for. I've been saying that somewhere in the mid 350s, but I don't really know where. It might take a couple of days putting this intermediate high. I know that the futures are green right now, so move higher. That's okay. This is something that I did acknowledge. It's probably going to happen. And then if the price does break down out of this broadening wedge that we're in because of this partial rise that I see, this could be an easy three-wave corrective wave down. Could be extending the downtrend, and this is precisely what I'm looking for. So that was awesome to see that target come up. Now if the price does make a wild bounce and there is a big rally, which is probable, I think Ron Walker's been talking about that, and that guy's almost always right. It's crazy. If you want to watch someone who almost always gets everything right, like, go watch Ron Walker. Anyway, so if the price does close above the pattern, above 411.74, then the target's up towards 431. And this is a pretty good pattern, I think. If on Thursday we open high and then close low, that's going to be a really good sign we're going for a bearish breakout. If we open with a gap up and a push higher, probably a close into this candle, that's going to be very, very, very bullish. So I just wanted to share that little piece of analysis. Bulkowski here, he's got some notes. I thought about going over it, but I don't know, maybe I should. He says that the pattern is composed of 3 bars, a gap followed by 2 lower highs and 2 lower lows. So here's our 2 gaps, and then here's our lower highs and lower lows right here. He has some trading tips here. He says the pattern acts as continuation pattern 69% of the time. So that's crazy, right? That's a pretty good chance of downward continuation. A breakout occurs when the stock closes either above the top of the pattern shadow or the bottom of it. Okay, I already talked about that. So he says trade with the trend. Since the inverted gap to H acts as a continuation pattern most often, expect the breakout to be downward. Interesting stuff. Wait for the price to either close above the top or below the bottom of the pattern before taking a position. So he wouldn't say to enter into any shorts or to buy any puts until the price passes this low at 370.59. He says that the inverted gap to H fulfills the measure rule 44% of the time. That is to measure the height of the pattern, add it to the high price to get an upward breakout, or subtract the height from the low price to get a downward target. And that's not what I did. I actually used his percentage meeting price target up here, I believe. No, down further. No, not there either. Here you go. The measure rule. So the height of the pattern is always going to be used to measure the target. And what Bulkowski adds is that it is a statistical probability of reaching that target. So in a bear market breaking down, if the price, closes below the bottom of the pattern, then you've got a 50% chance of hitting that measure rule, that full move. And so to generate the target, you take the height of the pattern, you multiply it by 0.5, or you take half of it, and then you apply it to the breakout price. And that's how you come up with Bulkowski targets, and that's why they work so well. It's because these are statistical averages. And he used a lot of stocks. I think he goes into it. He says, for the following statistics, I used 1,205 stocks starting from January 1990 to February 2013. This is an incredible sample set. You've got to acknowledge the work that Bulkowski has done, and that's why I think it's the best form analysis out there. Anyway, this is going to be much longer than I want it to be. I'm going to be in processing for a few minutes. So, all right, happy trading.